Morning traders, Paul here with GammaEdge. Today is Tuesday, the 6th of December. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today. Market models have chopped us back to cash and short. The long-term trend model is still long, and it's been long for a while, but it's horizontal. The slopes are now pointing downward, and so it's under pressure. It could reverse. Effectively, there's not been a trend. You'll see that on the next slide here. For the SPX combo, interesting to note that plus GEX has moved up to 4,200, minus GEX has moved up to 39. Generally, when we see the GEX levels move up, we have a complete shift in the overall structure. This is good for the bulls. So just be aware of that to see both of these move up has back tested well over time. So just be aware that we may still have some breath left in this bull leg. Upside movement today, we don't think we're going to get much higher than 40.70. We also are not looking any lower than 39.55. We're looking at that 40.25 area, maybe 40.20, 40.25 area, which is the top of transitions. Could be a pretty key area. I would like to see us close up there if we can. We are below all of the transition areas in the SPX complex. This is bearish for the short term, and it also puts us in a tenuous position because if we can't break above transition, it's going to embolden the bears to the downside. Transition zones, I've got them listed here. Note the 4,005 is a common theme, so just above that 4,000 strike Livermore level. We are looking at the 1 DTE, that 25 to 45 level. Just pay attention to those today. There is a significant amount of put delta that is expiring today, Tuesday, and tomorrow. This could remove some of the downside pressure and allow the call deltas to really start charming their way and push the dealers into to having to compensate that way. Taking a look at the cumulative tick model, initial long, 1, 2, 3 days, reversed yesterday, get out here. The horizontal nature of the ribbon, it's not in an uptrend, it's not in a downtrend. When we see this, effectively, there is no trend on the long-term scale. So you need to shorten your duration. If you try to go long for any duration of time, you're just going to get chopped up. This is what the market model is telling us. So we are in day one of the downside. It could reverse higher. We are looking for a continuation. We might see something like this, which just occurred recently. We might drift upward. If we do retake the ribbon, expect more of the same in terms of the long-term model. Key levels for today, as I said, we've moved up to 4,200 from 41. We've moved up to 3,900 in minus GEX from 38. Both of these are constructive for the bulls. PM-Settled complex, 1.9% open high-low close, very conservative number, so we are expecting tight movement today. I will note here this 40.70, 40.75. We've got pretty much put-dominated deltas here. This is the overall PM complex, so we are getting heavier to the downside. Just be aware of that. 4,005, 4,030, and you can see we're right here. The closest strike, that 39.98 close strike, is the Livermore level of 4,000. So for now, if we can't retake that, that could be a problem. We are seeing the JPM January strikes already starting to appear. These are short calls, and you can see that up here. And we're also seeing the mothership of JPM's December strikes are appearing down here at 42,000 contracts net negative right now. Those are short calls also. The 0 DTE, very narrow range, pretty well defined. Net negative expiry for today. That 40.40 area is upside, 39.50 downside. Very well defined though. When we see this, we would like to close above this if at all possible. Taking a look at the 1 DTE, probably a little more problematic. We've got a little bit more range to go towards, so I would like to see this clear up. Depends on what happens today in the markets, of course. Note, though, we do have a significant amount of put delta scheduled to come off. We think that is constructive for the bulls, so we'll just have to see what today's action does to the overall structure. So this is accruing positively, but just be aware that a little bit higher range to get to and a little bit higher bar to move towards. The combo complex, which is the AM and the PM settled complex, again, same transition area. We're below it. Need to close in the upper part of the range or up in this area. Here's that JPM strike up there. Here's the December strike down here. Note the call-dominated delta structure is collapsing. If we get a continuation of more red here, that means the calls are being closed, puts are being open near the money, and that's a problem. That will continue to put downside pressure on the markets. So we are looking to watch this overall delta structure as we go forward, and then of course the gamma structure starts flipping below that 4005 strike and heading south. Finally, last slide, we're right here. You can see a very well-defined transition, as I've noted here. That's that 41.45 January strike here. Here's the 4,000 strike, very key level because that's a Livermore level. 3,900 down here, that's the new minus GEX level, the new upside GEX, 4,200. Here's that 4,100 strike, so 4,050 here. We need to make progress up here, and if we don't, we're going to continue to advance downward, so just be aware of all of that. So that's it for today. I would urge everyone to come join us at GammaEdge.us. Follow us on Twitter, GammaEdges with an S, and then on YouTube. A couple things. First of all, if you like today's commentary and found it useful, let me know by smashing that like button, and of course, subscribe because Taylor, myself, and Michael are posting videos to help you learn more about this thing called Gamma and Delta and how you can apply it to your trading styles. So with that, I bid you farewell. Make it a great Tuesday and hope to see you in the Discord. Thanks, everyone.